What's up, YouTube? YugiohTube here, and my goodness, what a time. What a time to have physical assets in the form of cardboard. Never have I seen something like this. Never have I expected anything like this. What we are seeing right now in the collectible market, whether it be Yu-Gi-Oh cards, Pokemon cards, or even sports cards, we are seeing new uncharted territory and spikes and highs I don't think I've ever come close to even seeing. We are absolutely booming. The card industry right now is seeing, again, all-time highs. And there's a few reasons why I think that we're seeing this. Now, of course, am I going to say I saw this coming? Absolutely not. I never, ever saw or even had an idea that anything like this or even half of this would even come to fruition. But what we are seeing right now is exponential growth. Is it sustainable? I don't know, and I don't think so. But is it good to see from a collectible and investing standpoint? Absolutely. Okay, this is unbelievable. We are seeing cards up to 300% in a matter of 3 weeks. In 3 weeks, we have seen cards completely triple in value. Triple. Some even more than that. We have seen more buying activity in this market. We have seen as well more selling activity, but guess what? It just gets swooped up. Scooped up by everybody. You put anything on the market and it's gone. At a fair price, at a price 2 months ago, forget about it. It's gone in 10 minutes. I mean, this is unbelievable in a good way. So, in a time that isn't so good, we are seeing some good results here, at least from a cardboard economic standpoint. And obviously, I hope everybody in this time is safe and healthy and everyone's loved ones are doing okay. So let's just get that, of course, out on this video. That is the most important thing. And all this stuff is secondary. But going back to what we're discussing on this video, we have seen tremendous growth, absolute amazement I am feeling right now. I never would have thought that this would happen, and let me give you some reasons why I think this is happening. Well, the first thing, because of what's going on in not only this country but around the world, nobody is using their disposable income to book a flight, to take a vacation, to go to a sporting event, to watch the Nets, to watch the Yankees. Nobody's doing any of that. Nobody's going to the movies. Nobody's going out to dinner. Nobody is leaving their home, which is good. Everybody's abiding by the precautions. But with that, people have all this money, especially if they're working from home, and say, well, what? I'm bored. What am I going to do with this money that's coming in? I can't go on vacation to France or Italy and look at the Eiffel Tower and go to Thailand and Taiwan and wherever it might be, Japan, of course. All this money is just being funneled into online shopping, whether it be Amazon, whether it be eBay, whether it be other websites, whatever it may be. It's just being funded all over the place, online shopping. And another reason why I think we're seeing this massive growth and spikes is obviously, we hear about that stimulus check, that $1,200 stimulus check. Well, you're going to say it's only $1,200. That's not even half of a dark magician. It's not even a quarter of a red eyes, right? So what's the $1,200 really going to do in terms of boosting this economy, in terms of the card collectible market? Well, here's the thing. $1,200, we forget about the unemployment benefits here, where you're getting $600 in addition a week, $600 a week, in addition to unemployment benefits. So for those people not working, and in some places, it might be financially better for someone to be laid off or furloughed and not work and collect unemployment because They're home. They're making as much, if not more money in some of these cases. And they have all this money and they're home. And what are they going to do with it? They're going to put it back in, which works for everybody selling cards or selling collectibles or sports cards or sports figures online or video games. We've seen a huge jump in video games. And why is that? Well, that's because people are home playing video games because there's not much else to do, right, in quarantine. But also because, in addition to not really having anything to do, there's more money being funneled in. So what we're seeing here is a situation in which all of this money is being created and funneled into the economy, especially the online economy, and it's being spent, which in a way is kind of concerning because we don't know the long-term effects of what's going on currently. And of course, the Fed isn't going to continue to print money and boost the economy this way. And if it did, we'd have to worry about inflation, which I'm going to get to in my next point. But at this current time, we are seeing so much money being funneled in. You know, student debt is being at least postponed or delayed for X amount of months. Rent, some of the rent situation, people renting is being, of course, delayed or postponed in ability to pay it back later. As we know, that could be a dangerous cycle. And, of course, we are seeing just unbelievable results from this, but it is scary, okay? And it is scary because here's the thing. What happens when this whole situation blows over, hopefully? What happens economically, I don't know. This massive unemployment rate right now we're having. The Fed is not going to continue to say, okay, here's 600 a week and an unemployment. So what's going to happen? When these people have to go get jobs again, these people that are unemployed, what is going to happen? I don't know. That's the magical question. But nonetheless, at this current time, we are seeing huge amounts of growth. Another reason why we are is a lot of folks are looking at the stock market and say, whoa, I was up so high and I lost my shirt in the last couple months. Yes, the stock market has risen back up and rallied back. But a lot of folks, like what usually happens in a recession or depression or some sort of economic problem, is that sometimes they lose faith in the market, and sometimes, in the stock market that is, they go somewhere else, whether it be gold, whether it be assets, whether it be sports cards. Whoever would have thought that? Whoever would have thought that sports cards would see this meteoric rise, okay? You also have influencers doing this. You have a guy called Gary V posting about these sports cards, say, I like the value here, and poof, within that day, they get swooped up. Influencers are now getting involved. Very, very rich, affluent, wealthy influencers are getting involved in the sports card market. But in terms of the trading card market, in addition to the documentaries with the sports cards, obviously Michael Jordan documentary, you're going to have a Tiger Woods documentary, Mark McGwire, Sammy Sosa documentary. It's going to keep pumping on. But in terms of the non-sport cards or the trading cards, it's simple. I mean, everyone's getting all this cash flow for the current situation. They might be a little skeptical of the market. They might say, I might be better off going into physical commodities and goods here. And the most important thing is, here's the thing, what happens with inflation is, if the Fed says, I'm just going to give everyone more money, well, what does that do to the value of your dollar? The value of your dollar gets weaker. The dollar value that you had 3 months ago is not going to be the same value. It's going to be worth less than it was 3 months ago. Well, why is that? It's because there's more money pumped into the United States. And this is talking from a United States standpoint, everybody. So for everyone internationally, I can't really speak to what exactly is going on there. But in terms of the United States, yes, the Fed is pumping money, at least for this last month, this past month, to try and obviously, help alleviate with the situation that's ongoing here. But when there's more money being printed and pumped into the economy, The supply of money in the economy obviously is higher, right? So the value of that dollar bill goes down because there's more out there. Think of it like a card, you know? If you find out that a prize card has 1,000 copies after you thought or everyone thought it had, well, 100 copies, well, then the value of that prize card is inherently less than it was before everybody knew what was going on. So basically, because of inflation and because your dollar value is worth less now than it was 2, 3, 4 months ago, that's why you're seeing higher prices in cards. And you won't only see higher prices in cards if this continues to go on. You're going to see higher prices in goods, consumer goods. You're going to go to the grocery store, and the prices are not going to be the same because, again, your dollar today is not what it was 3 months ago before this whole money situation was being pumped into the economy. And look, if this were a 1 month thing, cool. But if this were a 2, 3, 4 month thing, or if this situation comes back again even worse, if it becomes even worse, let's say in the fall, the situation becomes dire and the health of the United States and of people around the world becomes even more serious, well, then we got a real problem. Of course, because of the health of everybody, that's number one. But secondly, economically, what are you going to do? What are you going to do? So let's hope that doesn't happen. Of course, number one, health-wise. Number two, economically. It's a problem. It's a bomb waiting to happen if it does, okay? Hopefully the fall comes through and everything, or the winter, everything is fine. But again, we'll have to wait and see. But because there's more dollars in the United States economy, the value of the current dollar has gone down, which means the prices of goods will go up. In addition to the fact that people have stimulus checks, people have unemployment benefits, pretty substantial unemployment benefits. So keep in mind that $600 a week and unemployment in the middle of a, no offense, please, Idaho or Kansas or Utah, it's worth a heck of a lot more than that of somewhere in the tri-state area or a Chicago or a California. Nonetheless, all this money is being injected into the economy and all this money is being spent. And with the fact that people might be a little bit timid of the stock market and that people might be worried of inflation, they might say, okay, I'm going to put it into the physical assets here because with physical assets and inflation, it should continue to go up. Now, obviously, that's a big if. If people can't get jobs when this whole thing is over, that's going to be a problem. We could head into another depression kind of state. Hopefully not, but we'll have to wait and see. The only other times, I believe, don't quote me on this, but the only other times the U.S. kind of had to, or the Fed had to step in here was in the Great Depression and also the 2008 recession, the housing bubble, when the U.S. the government kind of had to take action. So we'll have to wait and see, but those are my reasons. Again, let's just recap the reasons. The reason number one, people are maybe a little timid of the stock market. Reason number two, people might want to put it into assets instead of stocks. Reason number three, people are a little bit nervous of inflation. And with inflation, that should bring the value of these cards up, or at least the perceived value in an increased money supply. And of course, the fourth and final reason, in my opinion, is the stimulus check of $1,200 a month, plus the pretty nice unemployment benefits if you were to be unemployed right now in the United States, especially in a lower cost of living area where that $600 a week plus the unemployment benefits really can do someone a lot of good in this time. And of course, let me reiterate this. All this is economics. All this is financial discussion. All this is my opinion. Of course, just take this with a grain of salt. But the most important thing is hopefully everything continues to move in the right direction health-wise, and we kind of can beat this thing. And I know, no one really knows what's going to happen, but hopefully we can all move on and use this as a learning experience. And hopefully, again, it continues to get a little bit better, and hopefully it doesn't come back. That's the main concern. All right, until next time, YugiohTube signing out.